Hello and welcome to the latest episode of Zach's Tech Talk Tuesday. My name is Ryan McQueeney, and today we're going to be doing a little bit of celebrating a fun occasion here in my progress at Zach's Investment Research and tailoring our episode to match that celebration. So this week, I will be taking over our income investor portfolio service. The strategist in charge of that portfolio right now, Brian Hamilton, has tendered his resignation with Zacks and is moving on to bigger and better things. So definitely want to wish Brian a bunch of luck there, and all the luck in the world in the next phase of his career. But that means I have been given the nod to take things over in his absence. So for those unfamiliar with income investors, it's one of our longer term strategies focused on buy and hold companies that pay out great dividends. I'm going to save my take on that strategy for the subscribers there, and my first official commentary drops this week, Thursday night. But I did want to do a bit of a crossover with the income investor idea here, just to, as a fun little idea to celebrate the occasion, by just digging into a few dividend-paying tech companies that are on my radar. Tech stocks have, of course, been unpredictable at times recently, but the sector has continued to rebound from each stretch of volatility relatively strongly, and I don't think there's any question that tech has been the leader of the market's strong multi-year run. However, I think this might mean that some income-focused investors are feeling a little bit left out, as a really strong income dividend-paying tech stock kind of seems like a bit of a golden goose. I don't think that's necessarily the case. We see dividend-paying companies in the broad tech sector in certain industries, others, some of the more high-flying industries over the past couple of years. All these fun tech growth stocks we love to talk about on this show. These obviously not going to be your dividend-paying companies, but the strong, long-time blue chips have also been having a good past few years. Everybody's been having a great past few years in tech. So, a strong dividend-paying tech stock certainly exists. And I wanted to take this opportunity just to highlight a few that are on my radar. I want to preface this by saying they're not in the income investor portfolio service. None of the three that I'm going to mention today are currently. There are definitely some tech stocks in that service, but I just wanted to, for the sake of, I don't know why, just kind of spotlight a few, and maybe one day there'll be something that we do take a look at in income investor. So we'll start with there by digging into the first stock, which is going to be Garmin. Trades under the ticker GRMN. Garmin, you of course recognize the name as one of the OGs of GPS navigation. The company's actually transitioned more into a wearable tech company over the past few years. It's been kind of an interesting evolution, but definitely one of the pure play wearable tech stocks on the market right now. I wanted to mention it because it's holding Zacks rank number 2 buy and presents a pretty awesome dividend yield of about 3.3%. Garmin's trading at a slight premium to the broader market, except for its valuation of 19.9 times forward earnings is not bad, considering where it is in tech. And PEG ratio is sitting at 2.5, so certainly not outrageous. It looks like a decent value play on top of its dividend, its strong dividend yield. Pretty good balance sheet, decent cash position, generates about $3.42 in cash per share, and has a net margin of 18.6, which dramatically outpaces its industry's average. And Garmin, looking at some other cool key financial metrics, has a return on equity of 15.7%. So an efficient company certainly right now. So that's the first, that's Garmin. On to the second, and this is more into one of the trendy fields, the growth fields that I mentioned before. That's NetApp, that trades under the ticker NTAP. For those that don't know, NetApp is a hybrid cloud company, really focused on data management, and offers a range of cloud data solutions, including physical drives, software, and backup storage. The hybrid cloud space is an interesting one. Obviously, you're split into the two main cloud groups being public and private, and then the hybrid is as the name implies, kind of a mix of the two different things. And the net app is on the storage side. Not as juicy of a dividend yield as Garmin, but definitely still pretty attractive for income investors with a yield of about 2% right now. And this is still in its growth phase. So I think that's where maybe it sticks out here, is that still projected to see a long-term annual EPS growth rate of about 14%, a little bit pricier at 23 times forward earnings, but that's actually pretty decent considering the growth potential I mentioned there. And then that's evidenced when you look at the stock's PEG ratio, which is at just 1.7. So clearly getting a decent price for that long-term growth outlook and the short term at the very least. So NetApp is one that pops up on my radar when I start digging into dividend-paying tech stocks. And then that's I like how we're going with this list because we're going to round out with kind of a more speculative growth one that's going to be a lot more volatile. So we've kind of gone from this legacy player with a huge yield and more of a value play to one in the middle, and then one, on the other end of the spectrum, but still pays a dividend. So pretty interesting. And that stock is Cypress Semiconductor, and that's the ticker CY. So you've probably heard of Cypress if you've been following Internet of Things stocks in the past few years. One of the leading IoT plays right now, developer of high-performance digital and mixed signal integrated circuits, and has been a huge IoT player since it bought Broadcom's IoT business in 2016, paid $550 million for that business. Cypress's WISED IoT platform is what the big play here is, WICED, one of the largest IoT portfolios in the industry, and definitely a pure play IoT stock in my view. It's a low price stock. I believe it's still around $20 a share. And as things go with that, it ends up being a lot more volatile than these picks. And definitely one someone would point to as something to stay away from if they believe this cyclical run for semiconductors is running up. But as we've touched on the show here, I don't necessarily hold that view myself. And I think IoT specifically should be one of these secular growth drivers that's really just getting off the ground now. And Cypress Semiconductor is a Zacks ranked number one strong buy right now. So definitely one you'll want to keep your eyes out on. And like I said, pays out a dividend. And I think fits perfectly as number 3 today on our list, as you can kind of see us transition from a value play to more of a growth play. So just to recap, that's Garmin, NetApp, and Cypress, getting you a little bit of everything from consumer electronics to enterprise data to semiconductors, covered all across the map, and kind of help show that there are dividend-paying tech stocks, and they run a wide range of industries. They're from a wide range of industries, and they can fill different holes in your portfolio if that's something that you're looking for. So definitely check those stocks out if any of the things I said interested you. Again, these are on my radar. These are not in the income investor portfolio, but I thought it would be interesting to take a look with that theme in mind. So thank you so much for tuning in. Short one today, but just want to wrap things up. Again, if you're an income investor subscriber, you'll see my first commentary this Thursday night. Thank you guys for joining us as always on the Tech Talk Tuesday. Please subscribe and leave us a rating on Apple Podcasts. Also available on Spotify for anyone listening over there. And then all of our exclusive audio content is available at zacks.com/podcasts. Thanks again, and we'll see you next week.